All right, so let's continue. So I was talking about QMR and how to mark out a QMR. So like I said, the QMR is the last order block of the swept high, okay, which may have been violated by price. And then after forming liquidity, price might actually come back to use that order block. So that's the definition of a QMR. All right, so most times I prefer using QMRs to normal order blocks because QMRs work a lot. So go to 45 minutes. What's 45 minutes time for? Okay. About that. So check 30 minutes. Okay. So yeah, I've seen one. So look at this. Keep muted. Okay. Yeah, correct. So look at this. So this is another style of choosing QMRs. Sometimes, sometimes, okay, this has been used. Sometimes I just select the last two candle wicks. Okay, guys, if I'm in a buy scenario, I don't know how to, I don't know how I will explain this to you and you actually pick up what I'm trying to say, but just pay attention. So if I'm in a buy scenario, I want to see a sell candle and a continued buy candle that swept that sell. It's actually like an order block, something like that. Okay, it's also a QMR, it can be used. And if I'm in a sell scenario, I want to see the opposite, like a buy candle and then a sell candle dropping. If you always check my charts, you are going to see these things, like you're going to see them on my chart. So sometimes on the channel, when I drop um trade ideas, endeavor to always check it out. Okay, and sometimes I'll try to mark these things out for you. Okay, so I haven't really seen a QMR here because this one has been used. So, but I really want to show you like an order block example, um not just a I want to show you an order block example. Yeah, so yes, look at this one. Look at this order block here. So this was violated by price. Okay. So this was violated by price and we expect price to come back and utilize the order block later on. So I'll try to show you better examples of this. Sha. No clear man, yeah. So that's that. So it's just simple. Or I can also make you an illusional example. So if this is a low and that low is swept, break of structure, liquidity, and this. So a QMR is that other block that was here, okay, that was violated by price at this point. Okay, this was violated by price. So when price returns, most times he uses the violated order block as a QMR. So I just want you to get the idea. So that's what a QMR is. And also sometimes it serves as candles. So you can see here, like I said, you want to see two candles which represent an order block. Okay, look at this. A negative, then a bullish candle. In a buying scenario, this can serve as a QMR when I mark it out. Okay, just that this has been used, price has returned to it. So this the wicks of these two candles, when I mark it out perfectly, it is a QMR. Only that this one has been used, price has tapped into it. So I hope you guys understand. So, so can you check AUD is what time frame do you start your analysis? All right, so I do not particularly have any special time frame for my analysis. I do not particularly have any special time frame for my analysis. What matters most is, well, okay, for my day to day, I do check from 4 hour. I check daily, like is price forming any structure on daily. If I see any structure, then I want to move down to 4 hour to 1 hour. And if not, I do check 4 hour down to 15 minutes confirmation for trades intraday. Though this month of February, I didn't even have much trades. I've not been seeing setups, and most of the setups I saw were just traps. And as you can see, when I called them out, most of them did fail. Like the ones I told you, this would fail, this would fail. I have reasons why I am avoiding those trades. So it's not fear, it's not um lack of confidence. The confidence is actually knowing that this trade will fail and saying it out. Okay. So that's that. So when you are making analysis, you move from maybe daily to 4 hour to 1 hour. That will help you to um maybe catch intraday trades. And then maybe if you're looking for more higher time frame trades, maybe weekly to 4 hour confirmation. Yeah, sometimes daily to 1 hour confirmation and you can hold. So that's that. Then up next, what else? The full meaning of QMR. So QMR means Quasimodo return. So QMR means Quasimodo return. That's when just listen to the name Quasimodo return. So when an order block has been violated and price left it and it is returned to and used. So Quasimodo return. And the next question is do you have a fixed risk to reward ratio or you use swing point or both? I do not have a fixed risk to reward. I do not do 1:2 and I do not do 1:3. Neither do I do 1:4. So when I am sure of my analysis, I actually take what price has presented. Sometimes I do 1:3, 1:4, 1:5. I do 1:10, 1:9. Okay, I do 1:6. So, but depending on how I feel about the trade. At times, when I get 1:5 or 1:4 on a trade, I actually cut some of it. I can take partials, okay? Then I allow the rest to ride. So sometimes, let me show you some crazy trades I've caught. I have gotten things like 1:23, 1:17. So 1:10, 1:9. Look at this trade. This is a 1:17. This is 1:17. Okay, so all you need to do is just do the right thing. Okay, and you can see this trade. Um, this trade is as simple as it comes. Sweep here, uh, break of structure, liquidity, and this is a very devilish POI that I picked. So and price just dropped into the POI and boom, full buy. Okay. So that's that. I do not have a fixed RR. So, so I don't know why. Yeah, I don't know why price hasn't been so favorable this year. But sometime around last year, I was constantly catching 1:20, 1:20 something. So, you know. So someone said we should move to gold. Please, is that you posted on X? Why did it fail? Let me see the trade first, then I would know if it's the one I'm thinking that you're talking about. So, was it this? This should be the one, right? If it's this trade, it's a trade that consistent. Okay, I'm going to answer the question. If it is this trade, the thing is, when you look at this trade, let's go to 1 hour. Honestly, I'm going to tell you that this trade looks clean. Yeah, okay, it's it. So honestly, I'm going to tell you that this trade looks clean. Okay, but all that glitters is not good. about this trade, these are things I know personally. Okay. And I want you to know this. I am not marketing anything to you, but the reason why this trade failed is not something that I can freely give out. And the reason is the value of my information is kind of something that I hold high. Okay. So this isn't something I'm just going to say it out here, but clean as it comes, this trade actually looks clean, but it is not. There are issues. There are things that are called secrets of structure and liquidity. I discovered these things. You will not see it on YouTube and you will not see it on anybody's channel. I discovered these things myself and I started backtesting it and I saw that, yeah, these things actually work consistently over from February 2025 to October 2025. I was studying the same concept, the same things. I was studying the same things, try to see how do these things work, what makes them work. Okay. So it's actually not a reason. It's not one of the basic things that I teach you. Although most of the ones I show you here, you won't find them elsewhere, but they are deeper, deeper things. So when I say things like, okay, study, check your charts, try to be observant, journal your trades. I journal my trades a lot. Any trade I take or any trade that I do not take, but I have reason for which I didn't take this trade. I just screenshot it and put it in my journal. So it's very important. Over time, when you are studying, over time, you just discover something. It's like a vision. You discover something you've never known before, and that's just it. So I'm sorry, guys. The reason why this trade failed is not something I can say. Explain the confluence you use slowly and what makes a trader consistent. Okay, the confluence I use is, let me use this, okay, let me use this gold buy as an example. Okay, so um, you see that here, price is moving. Okay, price is moving, and actually, you spot, and I want to tell you something that you may not believe, but no one should sell you any discount and premium sheets. It doesn't work. Okay, I want you to know that I've actually checked it. It doesn't work. The thing is that when you are correct, price will play, regardless of where it is. So the main thing is, are you correct or are you not? That's just what you have to know first. So the confluence that I use is when I see a sweep of a low and I see a break of structure and I see liquidity, I want to validate if this structure I have seen is correct. Now, how do I know that this structure is correct? So from the my pinned tweet, the thread which I wrote, is it Secrets of Structure and Liquidity? What's the name? Okay, yeah, the one that is pinned on my page. So there are things that I wrote. Okay, like for example, I said when price is at the peak of a trend, okay, let's say for example, price was buying here. Okay, price has been buying, and suddenly at the peak of this trend, just in the middle of nowhere, you spot a sweep, a break of structure, and you see liquidity. Now, I want to tell you that most likely when price returns here, it's just going to break this trade. This trade is going to fail. But now, one of the most important confluences, one of the things that will save you the most in trading structure and liquidity is confirmation. Confirmation. So if you've not read my trade on confirmation entries, that means you are way, 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 way back. Like there are people that attend sessions that I do, free sessions or our private classes, they understand what I'm saying. Why? Because they are up to date with my page. Okay, so now what is confirmation? Confirmation is just a repeated pattern on lower time frame. Okay, so now seeing this, let me assume that this whole structure here, this whole structure, at the peak of a trend. Now, at the highest point of a trend, I just spot a sweep, break of structure to the downside, and liquidity to the downside. Okay. And then now I'm looking for confirmation. Let me say I saw this trade on daily time frame. Now, for daily time frame, your confirmations should come from 1 hour and above, 1 hour, 30 minutes at least, 1 hour, 30 minutes and higher time and other time frames. Now, when I get to 1 hour time frame, what is the conference that I want to see that will make me confirm that, yeah, this is actually the trade I want to take? Now, I want to see price drop into my POI. Now, create that same pattern, which is what? A sweep, a break of structure, liquidity. Now, when you see this on the lower time frame, such as 1 hour, you already know that, yeah, this is confirmation that I should take this trade. And then when price returns, take this trade, then boom, your full sell. Now, another advantage of this confirmation entry is that if your stop loss was supposed to be this huge, like maybe let's say your POI was here and your stop loss was like as big as this. The stop loss was this big. Okay. So let's say you are supposed to get 1:3 or 1:4 in this trade. Now, confirmation entries would help you to size down your stop loss and maximize your profit. So now you are going to get something like this, a very small stop and the same take profit. Okay. Now you are still looking for 4 hours, but on this same trade, someone has done 6 to 7 hours, and when price is already hitting the the low of this confirmation entry, I'm already seeing 4 hours, okay, and I'm already taking half of my position or some more, and then allow the rest to ride, or I even hold my position to full. So someone is already seeing 6 hours using confirmation in a trade that you would have taken a loss if you didn't know, or you would have taken 3 hours. So in a scenario like this, when price is at the peak of a trend, or even if it is opposite, we are selling and price is down at the peak of a trend, ensure that you use confirmation entry to know that what price has actually changed direction. If not, when price just comes back, it will just whip your POI off. So that's one of the most important conferences I use. Yes, that's my trade confirmation. That's correct, Oscar. So on Telegram, yes, I do drop my trades on Telegram. My trades are on Telegram. So always endeavor when I drop my trades, you look at my charts. What am I picking? How am I taking my POI? Go into your chart, look at it, validate it. Validate, should you take this or should you not? So being in the channel does not mean automatically that every drop is a signal. Okay, validate the trades. So let me show you an example of confirmation. This example, I've made it so many times that I don't even want to use it again. So many times. Okay, so look at this on daily to weekly time frame. Yeah, so here you have what? You have a sweep, break of structure, and there is liquidity. Now on lower time frames such as 4 hour, hmm, you look for your confirmation when price hits your POI, another sweep, break of structure, liquidity, and you see that a trade which the stop loss would have been this huge. Imagine having a stop loss from here to here and waiting for weeks for price to give you 2 hours. So I've already used confirmation entry to pick how many hours there, 6 hours to 7 hours. Okay. So just seeing the same pattern is already a confidence to your trade. So is there any other question? Please guys, for the gold buys, I really can't do much about it. Can you check AUD USD? AUD USD, AUD USD. Is there any trade on AUD USD recently? I just hope I'm recording. I really hope I'm recording. Okay, I have AUD USD. There's nothing much to see here. 30 minutes time frame. The trade you want me to check, did it fail or it has not played out? Has it failed or it has not played out? Yes, bad man. Is it bad man? Yes, that's the first thing I look at. Sweep, liquidity, and POI. Yeah, that's the first thing I'm looking for. Okay. So when you become familiar with this pattern, when you just hit your chart, it's easy for you to recognize. Okay. So I am guessing the trade you are talking about, Enoch, is this. Was it this one? Was it this? Have I marked it out? Answer in the chat. Is it the one I just marked out? The trade I marked out has played already. This has played out already. It has already failed. Is it a buy or a sell? I'm actually looking on 30 minutes now. It's a sell and it's not the one I marked out. Did it fail? Did the trade fail? Yeah, mark it out. Mark it out. Let me see. Mark it out, okay? All right. After this, I will explain a sweep. Okay. 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 I've seen it already. You can clean your markings now. So this one, I was marking the bigger picture. So this one, right? This is it. Can you mark it out here on the 13th? All right. I'm asking you if the trade failed. This is it. This should be it now. Am I correct now? Okay. So yeah. So you want to know if this is a trend line liquidity? Is that what you're asking? Unmute your mic. Unmute your mic. Unmute your mic.
Yes, that's what I'm asking.
You should have just unmuted since. Okay. You want to know if there is a trend line liquidity here?
Yes. But when I marked it out, I will add issue with the. I was marking on my trend line. I will now cancel it. I'm asking it's not correct. That's why I asked you that. How did you draw your trend line?
Okay. I try to use candle bodies. So candle wicks. Okay. So let's just look at 1 hour. Let's see. It's actually a trend line.
But if I use line chart, is it also correct? Like try to mark out the points on a line chart.
Yeah, sometimes line charts are correct. Sometimes they don't always give very, very correct. Yeah, but you can see here that yeah, it's a trend line. At least you can see 1, 2, 3 points close to our line. So if you drop this closer, you can see that yeah. Sometimes I do use line charts. So this is like 1, 2, 3 points close to your line. And if you play it back on um what do you call it, candle charts, you can see that yeah, actually there's a trend line there.
Okay, so I can be using line chart to draw
Yes, and
my
if they are very,
liquidity.
yes, and if they are very, very close, you can know that yeah, it's actually a trend line. So this trade is even meant to fail. So I would actually be surprised if it doesn't. I would be surprised. So yeah, look at this. This is 1, 2, 3, 4, at least 4 touches. And look at this perfect rebounds on it. Look at price retesting it. So supposedly it's supposed to buy all the way up.
Okay.
Aside from that, you should want to see confirmation, even if this is going to sell. You should want to see a strong, a well-formed confirmation. If not, this is obviously a loss.
Okay. Thank you.
That's no problems. So that's that. So for the last guy, let me quickly explain. You said, I think you were asking, item for sure, because maybe a sweep on day one, maybe was on the day one, maybe a sweep on the bill, maybe a sweep on this. How can I reconcile that? Should I just sweep and see the candle body view or what? All right, so I taught this in our last class, Ethan, which means you most likely didn't attend or you didn't watch the YouTube videos. But the higher time frame superiority actually just means that any time frame that you can see that sweep and structure, that's your break of structure must be on that time frame as far as the sweep is there. So if you started on 4 hour time frame and you were seeing sweep and break of structure, you went to 8 hour time frame, you saw the sweep and the break of structure, then suddenly you went to the daily time frame, you were still seeing that same sweep, but then it was not a body break of structure, it was a candle. Then there is no break of structure there. Okay, there is no break of structure there. So let me show you an example. Just one example. I've used this example many times. You're even supposed to know it. Okay, let me revisit AUD. I taught this one like months ago. So I advise you to journal your trades. Oh, this is AUD. Okay. So always journal your trades so that you can keep track record of what is happening on your charts. So look here. There was this buy on daily time frame some weeks ago. Here. So you sell, not buy. So if you look here, you can confirm that there is what here? There is a this high, a sweep of this high, break of structure to the downside. Then there is liquidity. So we expect price to come back here, tap in, and just what? Drop. But why is it that price is not going to sell here? Why? Why? Why will price not sell here? Because this trade can definitely show, okay? It can definitely show on the daily time frame. Now you should check the weekly time frame for this. And obviously, if you are in my last class and you heard what I said about the candle theory, you can see that there is also what a sweep because price created this high, drop back, and also swept the high, and what did not create any break of structure, even though there was liquidity, and yet no break of structure. So which tells you that yeah, this trade there is break of structure on daily time frame, but there is none and it will fail. So let's look at it. So on the weekly time frame, you can see our sweep, our our supposed break of structure on the daily time frame, and our liquidity, which price is supposed to take, and then give us our sell. So there is no break of structure here, even though that on daily time frame we can see a break of structure there. Now, does the weekly time frame observe this trade? Yes, it observes this trade. Why? Because it can see the sweep of our high, and hence no break of structure, but only a week, telling you what that price is not planning to go in that direction. Instead, the opposite, and you see that actually price went to the what buys. That will be all for today, guys. I'm actually tired. Yes, that is the higher time frame superiority. Okay, always go with the time frame where your break of structure and liquidity is visible. And then, Badman, finally, okay, I'm about to answer you. Okay, don't be. So you said what a sweep is. A sweep is when a price has formed an initial low or an initial high and comes back to take it out and then what maybe break structure or um take out that high. So this is an example of sweep. What is a sweep? A sweep is what price taking out this low. So this is a sweep of this low. Now in the opposite scenario, price formed the high, mm, came back to take out that high and then take out the what transactional liquidity. So this is liquidity on this low was taken out, and this is a sweep. This is a sweep of this high. So price created this high, swept it. So is there a sweep there? Yes, there is a sweep. So this is a sweep. Okay. So it's quite easy. Do you understand? So this is a sweep. So let me show you chart examples. Like on the daily time frame, on this example I just showed you, price created this high, right? So price created this high and came back to what? Take it out. So this is a sweep of the high and then break of structure to the downside. So that's a sweep. And for a buy scenario, look at this low. Look at this low. I think I took this trade. So look at this low here. So price created this low and came back to what? Take it out. So this is a sweep of a low. So that's what a sweep is all about. Do you understand, please? Do you understand? That being said, like us to come to the end of the meeting today. Let me see you guys. Okay. So I can be noting you guys in case you need any assistance in my PM. So I know that you've been attending my free classes. So you can see Enoch's example, a perfect trend line. Most likely you'll be caught in trouble. Ahead. And I also want to show you guys something. Look at a trade my friend took some time ago. Just have 3 minutes. So I want you guys to see. that there's nothing much to teach here. It's not a matter of monthly or weekly, Ethan. It's not a matter of monthly or weekly. It's just where your sweep shows, that's where you want to see BOS. Okay. So if you were showing on 4 hour, you just check the daily time frame. And if the sweep is showing on daily time frame, if you can see something like this on daily time frame, then you want to confirm that this is a break of structure, not a week. You want to confirm that there is actual body break of structure. Now, for this trade now, okay, let me say I on 4 hour I have this, right? And I have liquidity. Now, what I'll just do is I'm planning to buy here, right? I'm planning to buy. Now I'll just go to the daily time frame. Can I see this sweep? Can I see this sweep on the daily time frame? If I can see it, can I see price above here? If I can see it, you want to confirm that there is break of structure, not just a week. I must confirm that yes, at some points from here upwards, there is a candle body that broke this structure. So if I can see that on that time frame, which is showing this sweep, then yes, my break of structure is valid. So it might be 4 hour to daily, and this will not show on weekly. If you have it on 4 hour and it's not showing on daily, then 4 hour is the highest time frame you should respect. If you have it on 4 hour and it's showing on daily, and then daily is the highest time frame you should respect. If you have it on daily and it's showing on weekly, then weekly is the highest time frame. So that's why it's called the higher time frame superiority. It's just like in a family, the last born to the senior brother, does the senior brother approve this trade? If yes, does the mother approve this trade? If yes, does the father approve this trade? So that's that, okay? And that is all for today. I'm really tired. So I'll stop recording now and I'll end meeting.